This holds your property managers, your leasing agents accountable. When you're managing a multifamily property, get it through your skull. The asset managers need to hold the property managers accountable. Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake Gino, and in today's video, we're going to be discussing how to manage a multifamily property. Now, most of you listening to this are probably saying to yourselves, this is so boring. It's not sexy at all. If you don't recall the framework, it's buy right, finance right, and manage right. It's real sexy to go out there and to buy a deal, to finance a deal. Unfortunately, most people don't focus on the manage right because it is a business. And that's the first thing. When you're managing a multifamily property, get it through your skull. You need to understand this. Buying a multifamily is akin or very similar, or whatever word you'd like to use, you're buying a business. And I didn't understand that when I first started investing in real estate. Even if you're buying a single family home, or you're buying a mobile home park or an RV park, you need to have the mindset of you're buying an asset that's going to create a stream of revenue, and that stream of revenue has to be managed. And if you don't understand that and your narrow mindset is telling you, hey, I just got to be a landlord, I got to fix the toilet, it's important. It's part of it. But if you don't take a broader view of it and you don't understand that you're buying a business and it's scalable, you're going to fail. You need to understand, you need to implement systems, and that's what we're going to be discussing on today's video because it's truly important. This is where I failed. I was always out there trying to find a deal early on as a beginning investor. I need a deal, I need a deal, I need a deal. Well, great. Now that you got a deal, what do you do with that deal? How do you truly create long-term and lasting wealth and cash flow through that deal? It's through managing right. Whether you're buying a duplex or like a triplex like I did on my very first deal, or in the deal we just closed 4 months ago, we bought a 68-unit deal. Very similar as far as the systems, the people, and the culture that you need to implement in running that business. Now, the first thing that I really want to, discuss when you're buying multifamilies or you're buying single families or buying real estate. There's two components to managing an asset. There's property management and there's asset management. When Jake and I bought our very first deal back in 2013, wow, it's that long ago. It was a 25-unit property. We managed the asset ourselves. Now, we sort of blended in the property management and the asset management, and it worked for us, but you have to understand there are two different and distinct responsibilities. Even if you're managing your own assets, you need to delineate the difference between the two. And that's the first big mistake that I see when managing a multifamily. Property managing is, to me, the customer service, the customer experience, the customer journey, onboarding residents, taking care of residents' calls, dealing with the maintenance staff. Great, you need that. That is so important. That's a big important component of manage right. And I see a lot of operators today not handling that. They're looking at spreadsheets. Spreadsheets are great. That's the asset management side. The asset management is the one who's dealing with investor relations, the one who's dealing with budgets, where the property management has budgets. I think the property managers should set the budgets and work in alignment with the asset managers. Now, when we had that very first property, Jake was managing the property. So he's the property manager. But then Jake and Gino are the asset managers. The asset managers need to hold the property managers accountable for their budgets and for their spends. And the property managers need to be able to run the property, need to be able to that customer service, that forward-facing view of the property. It's such an important component. It's the feel of the property. Asset managers deal with investors, deal with the rates of return, deal with the financing, deal with the capital calls. They'll deal with that side of the business. The property managers deal with the property itself. Now, understanding that is so important. And we made a mistake early on because all of a sudden, as property managers, we're saying, hey, you know what? Maybe we could drop our standards for getting renters in because we have a slow month. Whereas asset managers should be saying to themselves, should we be doing that? That may help us in the short run, but is that going to hurt us in the long run? As property managers, sometimes we may want to spend a little bit more. Yeah, a ceiling fan, looking at it right now, that's a nice ceiling fan, $200. Well, if you're renting a 1978 C-class property, do you need to spend $200 on a ceiling fan? It might not seem like a lot, but if you've got 100 units and you can buy the same ceiling fan for $50 and you're saving $150 on 100 ceiling fans, that's 15 G's. Doesn't seem like a lot in the grand scheme of things, but money does start to add up. So you need to understand the difference. The second component of great managing of an asset, we call the three: people, systems, and culture. When we bought our very first property, we didn't have people, we didn't have systems, and it was just the culture of Jake and Gino. We didn't have a cadence of accountability. We didn't have mission statements, core values. And for me, to be able to get into multifamily and to be able to start to scale, you need to look at that. In the beginning, when you're buying assets in the beginning, it's great. You may not need that in the beginning. I had a restaurant, one restaurant, for over 20 years. I couldn't scale it. And when I look back at it, I'm like, why couldn't I scale that to more than one restaurant? It's because I didn't have the culture. I didn't have the people involved, and I didn't have systems. I'm a guy. I'm going to do this. I'm going to do that. I'm in the kitchen washing dishes. I'm in the shed doing inventory. I'm on the cooking line doing all the cooking as well. And you can see Amma gets burned out. Not a good way to run a business. I needed to be there. And early on with Jake and myself, we were sort of falling into that trap. It was all of a sudden, I'm going to do this, I'm going to do that. And when we hit our third deal, all of a sudden, eclipse the 200 unit part, all of a sudden, we said to ourselves, how do we scale? We need to bring on people, and we need to create some type of culture within this organization. And within 5 years of buying our first deal, we were at almost 1,500 units. And we attest a lot of that to the systems that we started to implement and the culture we started to bring. Hey, listen, we need to hire people. We started working with Gino Wickman's company, EOS Traction, and we also started working with Vern Harnish's group, Scaling Up. 2 pivotal ports into our system. But you can see, let's go back. We realized that multifamily was building a business, and a business needs those 3 components. They need great people, they need great systems, and they need a great culture within that organization to attract the great people. And then on top of our business, we're trying to attract great long-term residents to live in our properties. Now, with the systems, something very important that we lacked early on, and I really never had it when I had that one restaurant. We basically coined it our cadence of accountability. And you may be saying to yourself, well, I don't really have to work on this. I need to work on buying more deals. And that sounds great. And it's really exciting to do that. But I've met so many investors and so many members that joined our community that felt that way. And at some point, they became burned out. And they said to themselves, what do I need to do? I had a member who joined about 4 years ago. He literally told me, I don't know how much money I'm making in my properties, but I'm still going to continue to buy. And at some point, it became a breaking point for him because he's stealing from one property to pay another property. That's not the way you grow and scale a business. You're going to go bankrupt. Now, what I would say to you is go on to the Jake and Gino podcast. We've interviewed some pretty cool guys. Mike Bacalowitz, Profit First. Very excellent podcast. He's written tons of books, but he really focuses on this profit first. And it's really what we're talking about here, the systems that you're implementing within your organization. Now, getting back to the cadence of accountability, what I didn't have in my restaurant was I didn't have those rhythms that you need in the business. The very first rhythm that I truly enjoyed this in the business is the daily huddles. Every morning, we'd get on at 8:45 in the morning for 15 minutes with our team members. Now, if your organization is really big, you may not be able to do this as an entire organization, so break it down. But getting on 15 minutes at 8:45 before the day starts, I want to know what your wins were yesterday. I want to know what your challenges or stuck points were yesterday. And I also want to know what you're working on today. And it's a great place to collaborate, great place to just get some great vibes with a team. What's going on? Team, tell me what's going on in your world. I love that. The next one was end of days. Well, this is great in property management because this holds your property managers, your leasing agents accountable. Now, we started implementing this during COVID because what we noticed is we noticed that the team needed a lot more, I don't want to say hand-holding, but they needed a lot more communication. And that's what we did. And we're still doing it to this day. At the end of day, Jake gets these reports. What are delinquencies? How many vacant unrented? How many guest cards do we have? Did we do the landscaping? Are there any other issues? It's not only holding that property manager accountable, it's letting them know what you've done. Do you remember about 6 months ago with this whole Doge thing when Elon Musk said he wanted government workers to know what are the 5 things you're working on? And everyone started freaking out. Well, it's just an accountability touch point, making sure that your team members are doing their work, but also that you're involved. And you know if they're having challenges, you can work with them. End of day is great. The next one is we have weekly L10 meetings, level 10 meetings with all of our team members. And if you're in property management, you want to have a level 10 meeting. And this is taken from Gino Wickman's Traction, a level 10 meeting with each property manager, whatever properties they're working on. You want to know what the quarterly goals are. You want to know what they're working on that week. You want to go over any KPIs for the week. And then also on the bottom, we have something called our parking lot. You may have a great idea. Instead of blowing up your property manager every time you have a great idea, throw it in that parking lot on that sheet if you've got a great idea. So when you come up to that weekly meeting, you're like, oh, by the way, I found a new roofing contractor. Let's give them a call. Or you know what we should be doing? We should be power washing our buildings. That's something that you can have in that parking lot where you're not burning that person out and you're having that weekly touch point. The next, I would say, meeting that we love to have is our weekly huddle. Every Monday morning at 8 o'clock, we get on with our executive team and we discuss certain KPIs. We discuss our priorities for the quarter. We discuss all the numbers that are really driving our business. In property management, we want to know what economic occupancy is, physical occupancy, number of units we have, profit per unit. What else are we talking about? We're talking about EMPS scores, the MPS scores, and the employer net promoter scores as well. So we have all different KPIs that we're sharing with weekly. And we just got off of one about a half an hour ago. It lasted an hour. And what was great about it, because I've been on vacation for the last couple of weeks, we really caught up on a lot of the numbers. We're actually talking about what are the top 10 amenities in multifamily. One of them is washer dryer hookups. And a lot of our leasing agents have been asking for them. So we're like, how do we come across and how do we try to solve that problem? That's what these weekly meetings are all about. It's about brainstorming. It's about holding the team, really accountable to those KPIs. And it's also coming up with solutions. Now, the final one is our quarterly meetings. Our quarterly meetings tend to be at the end of the quarter, going over what we just accomplished this previous quarter and setting up priorities for the next quarter. The meeting may last 3-4 hours, may last the entire day, depending on how big your team is. And you may be saying to yourself, well, it's only me and Jake. It doesn't matter. You still need to take a few hours every quarter to plan the next quarter. You don't want to do what Jake and I did early on by listing so many priorities. When everything's a priority, nothing's a priority. And you may be saying to yourself, well, what's a priority, Gino? A priority is anything that takes longer than 8 hours to accomplish. That may be implementing a new virtual system where you're showing residents your units. It may be building a website. It may be onboarding employees. Whatever that system is, if it's more than 8 hours, it's a priority. Now, when you're first starting out, what are the things that are going to move the needle the most in your business? And when you identify them, those are the priorities. Try to do 3 or 4, maybe 5 at the most. And from that meeting, you're listing out the priorities. Then what are the tasks involved to accomplish and to hit those priorities? And every week on the weekly huddles and on the weekly L10s, we're going over and we're focused on those priorities. And at the end of the quarter, if you're finished with them, we greenlight them, done. If not, they go on to the next quarter. Now, this last thing with property management and asset management is you need to adopt software, whether you're using Appfolio, whether you're using Doorloop, whether you're using Stessa, Buildium, whatever you feel comfortable using, you need property management software and AI. AI is the hot thing. Some of you are going to say, well, I don't want to use this. Some of you are going to say, I'm not tech savvy. Artificial intelligence is going to revolutionize, and if it hasn't already, changed the business. It's going to help you schedule more leads. It's going to help you parse through tons of data. It's going to help you look at your portfolio and see where the pitfalls. Every month we have a financial planning meeting, and I have our bookkeeper go through it, and I want them to go on and compare what we're doing this quarter to last quarter, this quarter to last year's quarter. The numbers are there, and you can see what's going on with income, expenses, what's going on with rents. It's such a great tool. Just go online and Google, if I am in the property management business, how can I use AI to become more efficient? And the same thing with an asset manager. You need to start implementing AI to help you become more efficient, whether it's coding bills, whether it's doing rent comp analyses. That's something that you should be doing on at least a quarterly basis on every single one of your properties to make sure where your rents are. And that task can be done. And if you're looking as an asset manager, you're going to want to actually go in and start looking and doing market research. If you're looking at a certain individual city, do market research using AI. And if you're going to look into another city, use AI. It's so important right now. Now, let me recap, because this is such an important topic. Because if you can't manage these assets, you're not going to make money. Someone once told me, and this goes against conventional wisdom, which conventional wisdom over the last 3 years, as you've seen, pretty much basically has gotten so many things wrong. Everyone is always focused on you make money when you buy real estate. You make money on the buy. Partially true. You do make money on the buy if you lock in for a good price and you're starting to cash flow. But what you really do is you really make money on the sell when you exit the asset. And exiting can be a form of refinance or it can be a form of sale. You're getting a big chunk. But how do you get to that point? You only get to that point if you manage your asset properly, if you run it like an efficient business. And if you take these steps that I've shared with you today, you're not only going to make money when you're buying this asset, you're going to make money when you're selling this asset. Thanks for spending part of your day with me. My name is Gino Barbaro, and I'll see you on next week's How To. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.